We're at REIT Week 2010 in Chicago, and I'm joined by Steve Brown, Portfolio Manager for American Century Investments. Steve, REITs rallied in large part due to their ability to access the public capital markets. Where do you see the capital markets right now, and how concerned are you about looming debt maturities?
I think the capital markets are in a very good position right now. Most REITs have access to equity and debt, and the debt capital markets in general for real estate have really come back. In terms of the looming CMBS maturities, I think they'll be worked out in an orderly manner. There's been a lot of money raised on the side for opportunistic investments in real estate, and we're seeing a lot of investment banks and commercial banks coming back in both the mortgage market and the CMBS market. So some owners may have to take a haircut on the loan amount, but I think most of the properties will get refinanced in a reasonably manner.
And recapitalization was obviously kind of the trend of last year. What do you think is going to be, or how do you think this year will be defined in terms of a trend?
I think in terms of the trend for 2010, it's going to be the return of fundamentals and the fundamental story for commercial real estate. Because what we've seen is, while demand is modest but it's improving, we're seeing a complete shutdown of new supply. And as we move into 2011, 12, and 13, we're going to be moving to a picture of demand being greater than supply in commercial real estate in the United States, and that excites me.
And as an investment, how do you view publicly traded REITs right now versus other forms of real estate investment?
I think publicly traded REITs are much superior to other forms of real estate. They have better management teams, better assets, better balance sheets, and better governance. I think that's the place to be if you want to invest in real estate going forward as in a diversified portfolio of publicly traded REITs.
And coming into 2010, what was your outlook for REIT performance, and how has that been adjusted now that we're about midway through the year?
Coming into the year, we thought it would be reasonable to expect about a 10 to 12% total return for REITs. And as we sit here in the middle of June, I may temper that return expectation down to maybe the 10% range as a result of concerns. The leading economic indicators have peaked somewhat, and obviously the problems in Europe, so maybe there's more of a focus on a slowdown in economic growth in 2011.
And lastly, what one trend or development do you think could cause that expectation to either be too low or too high?
Well, in terms of REITs doing better than 10% total return this year, I think if we get an uptick in inflows into REIT mutual funds, that would have obviously a positive impact on performance. And I think as people see they've had positive performance year to date, they offer good income, we could see that flow of money coming into REIT funds in the second half of this year. On the other side, if we continue to have negative events, external shocks, whether it's Europe, the Gulf of Mexico, perhaps a slowdown in Asia in terms of exporting, that could put a damper on equities in general, and that could impact REIT performance, although I don't think that's the most likely scenario this year.
Great. Well, Steve, thank you very much.
Thank you.
For REIT.com, I'm Matt Bichard.